Thursday, July 18th, 2019, Maneco 64, home of alternative economics and contrarian views. So it looks like silver is starting to take off, and that's good news for the precious metals market, precious metals price, gold and silver. It's not good news for those who like stacking. And why do I say that? Well, because it's going to get harder and harder and more expensive to exchange your Federal Reserve notes, your Bank of England notes, your Euro notes, your Japanese yen notes, your Australian dollar notes for gold, because it's going to get more and more expensive. The premiums are going to be higher and higher, because that's what happens in the bull market. Even when there are pullbacks, it will be difficult to add on to it. Sometimes in pullbacks, you see the premium go up even more. But for those of you who have been accumulating the last 5-6 years, when precious metals have been hated, you've done well, in my opinion, and you're gonna just sit and watch. For traders, it's a different story, of course. For traders, a totally different story, and that's why I'll look at some of the charts. I don't trade gold at the moment. I have traded it in the past, but I like to look at the charts to see where things are. So today, after looking at some headlines about the economy and looking at the markets, what they're doing this morning, I'll look at the chart of gold, silver, the gold-silver ratio, and also the price of gold in British pounds, which is actually very near all-time highs. Before I look at the markets, just wanted to say I have my end of Fed mug here. I have a bit of coffee in there. I started yesterday a campaign to shut down the bank. That means the Bank of England. A campaign to retire the old lady of Threadneedle Street. So I've got a mug for that as well, like my end of Fed mug. And I've got t-shirt as well. I've got a quote on the mug and a t-shirt from the founder of the Bank of England that I think encapsulates this whole Ponzi scheme, central banking system. And this is what William Patterson said back in the 17th century. And I quote him: "The bank hath benefit of interest on all monies which it creates out of nothing." Not only that, nowadays they have the benefit of derivatives, which they leverage even more, and it's kept off balance sheets. And I'd like to thank everyone who have bought merchandise in the Maneco 64 Teespring store. It helps bring awareness to the public, and it helps the channel. Thanks a lot. So let's look at the markets here. It's 8:02 a.m. London time. Yesterday I noticed that silver was doing well throughout the day, but gold was being kept down. It was even sold off down to around 1400. But at the end of the day, when silver did even better, gold caught up, and it went all the way to 1425, 1426 at the end of the day. So it was a good day for gold as well. This morning, I think that the same thing is happening. We're seeing gold being sold off here. We're at 1420.60, down just under $6. Silver has traded up to 1613 this morning. We're right now right around 16. So it's been sold off a little bit here as London comes in, as Europe comes in, probably Bank of England, bullion banks getting involved, right? So silver's only up about 3 cents. The Dow is down 74. So yesterday was another negative day for stocks. The Dow was down 0.42%. S&P was down 0.2%, and the NASDAQ was down 0.5%. So stocks are continuing lower this morning. I saw the Netflix results yesterday. They were pretty much in line, the revenues and earnings. But what I read is that they expected to have 5 million new subscribers for the second quarter ending in June. They only got 2.7 million, and I read as well that US subscribers dropped by about 130,000, mainly because they raised prices in the US for everyone to $13. So Netflix is down about 12% after the close. And that's why we're lower this morning as well. The NASDAQ 100 future is down another 60. It's down 0.75%. S&P is down 10, 1/3% at 29.73. Currencies, the pound has rebounded a little bit. We got below 124 yesterday. Right now it's 124.37, up about 5 pips only. The euro is up 0.13% at 112.40 against the dollar, and the dollar is down 0.2% against the yen at 107.70. Dollar unchanged against the yuan, 687.98. Crude oil, WTI is unchanged, 56 at 56.81. Brent is up 10 cents at 63.40. Bond yields have been dropping lower here, so we're back down to 2.05% in the 10-year. We had gotten back up to around 2.13. The 3-month is at 2.12, so we're still inverted here by about 7 basis points, the US yield curve. So now let's look at some charts. First, let's look at that gold-silver ratio. I've got a daily chart here. It looks like a move has begun. That's why I'm encouraged for precious metals as a whole. Historically, in a bull market, even though silver might be lagging right now, gold, it is silver that always leads the way eventually and outperforms gold. And this is looking like it here in this daily chart. But I'll also show you a monthly chart which shows how still there's so much room for silver to outperform. I mean, the key technical level below is going to be between 80 and 82. On a monthly basis here, it looks like it's quite negative. We made a higher high this month, but we're making a lower low. So this could be a top for the gold-silver ratio. Now I want to look at gold and silver just separately. First of all, I'm going to look at a monthly chart in gold. The short-term charts still look like a consolidation. We're more towards the top of the consolidation. Looks like we've got a triangle. And the key level here right now is 1440. So we're still going to see a bit of noise up and down. But longer term, this is what it looks like. I think, and you can see here, there's a massive falling wedge we've had for the last few years. We did break out of it like back in 2017, but we hadn't really broken out of that 1375 high from 2016. And so I think right now it's looking very good. There's not much resistance here, as you can see, up until some of the lows that we had in 2011, 2012, around 1525. So I think gold is looking very encouraging. Silver as well, of course, even though the equivalent of the 2016 high in gold is around 21 in silver. Just shows you how much silver has to catch up. So here's a daily chart of silver, more shorter term. You can see that today the high was 1613, and there's some highs from February this year. They're just above, they're around 1620. So I expect that level to be tested today, and we could be easily at 1650 this afternoon if silver keeps moving higher. Now the price of gold in British pounds, which of course is the currency that I use domestically and a lot of my viewers use domestically. You can see the high here from September 2011 was just below 11.95. It was 11.94.95, so basically 11.95. And that's looking good as well. We're only about 50 pounds away from the all-time high in XAU GBP. There is, of course, a lot of scapegoating because of Brexit. That's what mainstream commentators, politicians, Bank of England, that's what they're saying. Their excuse is that Brexit and also the prospects of leaving without a deal on October 31st is driving the British pound lower. They're just taking the attention away from the public, from the fact that the old lady of Threadneedle Street is mismanaging the currency. They're debasing the currency. They've been doing it since the crisis of '08. Just before that crisis, the pound topped above $2 just before the referendum, 3 years ago now. The pound was already at 150. So the fact that we are at 124 it's just has really nothing to do with Brexit, in my opinion. It's to do with the fact that the Bank of England and the monetary system, and the government, they've created so much money, which in this day and age is backed by debt. They've created so much of that the only way to carry that debt is to debase the currency, and they're going to keep doing it. Maybe Brexit might accelerate it a bit, but it would have happened even without Brexit. That's my, how can I say, assessment of it. And why do they try to blame it on Brexit? Well, because they don't want the spotlight put on the Bank of England and the monetary system, the system that basically extracts wealth from the general public. The general public that works hard to make a living, and extracts that wealth and uses it to enrich the very few who have direct access to that monetary system. And that's why we need to shut down the bank and retire the old lady of Threadneedle Street. What about some of the headlines? The economy, US economy. Yes, there have been some data that have been positive, like retail sales, but yesterday US building permits fell by the most since 2017. We've also had in the US rail freight declines signal economic weakness. It says here CSX shares fall sharply after chief executive calls economic backdrop puzzling. It's puzzling because we've had over 10 years of an unprecedented debt bubble created out of thin air, not created from real savings, real growth. So that's why it's puzzling, and we get bombarded by central banks, the Fed especially, by politicians that the economy is doing great. Even though they're looking to cut rates. We got the stock market at all-time highs. That's why it's puzzling. As I've said recently, I think we are already in a recession, and I'll go out on a limb to say that we are, and that we will find out in a few months' time that, yeah, the recession started around now. If you enjoyed this video, make sure you hit the like button. Don't forget also to share this video far and wide if you think others would like this kind of content. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.